By Prashant, we thought that the global cues looked positive for the market opening in India, but that's definitely not the case. The markets have opened in the red. What's your sense of how the Sensex and the Nifty would pan out? Of course, the consumers now will be eyeing the CPI and the WPI numbers for November as well. So give us a sense of how the benchmark indices will pan out in trade this morning.
Good morning, Chitali. The benchmark indices looks to be trading with a downward bias, while the Dow and Nasdaq all closed on an upswing. But in India, we are being hit by the strengthening US dollar index. If you were to see the Friday closing, the US dollar index closed at roughly at about 101.6. So we have the US dollar index strengthening. Second, the oil prices have moved up because of the agreement over the weekend. And third, because of the lowering of GDP forecast by RBI, so we expect markets to trade with a downward bias over the next few trading sessions. However, if you look at the derivatives data, the maximum open interest is with 8,000 put with about 78 lakh contracts. So which means even the downward side is capped at 8,000 level. So we expect markets to trade with a downward bias between this level and 8,000 levels. This is the short-term view on Nifty.
And what's your sense on oil prices globally? I mean, of course, we're seeing a fair bit of uptick coming as far as the oil prices are concerned. Now, do you think this is just a sentiment-based reaction after the Saturday's meeting that we saw with the OPEC and non-OPEC nations, or do you think they will hold fort in terms of the uptick that they are showing? I mean, of course, the compliance of the actual deal is something that still remains to be seen, whether the OPEC and non-OPEC nations will be complying, and there's a whole debate around the compliance bit as well. So give us a sense of around these, I mean, of course, the situation, the way it pans out. Do you see the oil prices holding fort with the uptick that we're seeing?
Chitali, oil prices have been moving up over the last few weeks. If you were to see the Friday closing at about 51.47, they have been trending upward. Our best view is that oil prices are likely to head upward, with the upside being capped at $60. Now, why we are saying $60? Because in US, the shale gas production costs are between $40 to about $90, with the median production cost being at $60. So at $60, a large number of shale gas oil fields will come up for production, which means the upside gets capped at about $60, but we are expecting a rally up to 60 from the current level in the next few trading sessions.
All right, and let's take a look at how the currency market is doing.